All right, here we are, Opendoor Stock, and it was some good, but more bad. And this is why, because the chart didn't hold up like we wanted it to. The support was at 175 and didn't hold it, but it did bounce up from the 170 and came up a little bit and holding some. But the reason why it's not doing so great is because the CEO didn't really give a good guidance. Let's look at the chart real fast. Here we are, like always, we start with the chart. This is the hourly chart, and here's my two blue lines that's been there for weeks. And are we trading in it? Yes, we're trading in within the two blue lines, $2 and the 175, which is good news. That's the only good news we have, though. That's the only issue. The reason why we're going down is because we had a downgrade, and also the CEO of Opendoor didn't give any kind of positivity in their earnings call. And that's what we're going to talk about the most on this video, about the CEO. But first, let's look at the chart, analyze the chart, and see where we can head to next. All right, today, once again, opened up, went straight down. You kind of fool everybody a little bit in pre-market. It starts to go up, get everybody excited, then just dumps on retail. That right there, that ain't right. But look, that's what happened. It went straight down, and then the 175 support is right here. It broke that support, went to 170, and it came back up above the support. And it had a little rally right there. We had about 4 green candlesticks, and then it sold off a little bit near the end of the day. After hours, where are we? 180, 181, which is above the 175 support, which is good. Good news there. That's about it, though. Let's look at the daily. Here we are with the daily chart. The support, 175. And like I said before, the last support that I'm looking at, 125 area. That 125 area. Anything below that, it's going to start looking ugly. And the CEO may start talking about a reverse split, which is not good. So let's look at one positive thing that I saw on a 5-minute chart for today. The support looked like 175, 177. When it had a little rally from 170, it came all the way up to 185. It held at 175, 177. So what do we need to break for tomorrow to get out of this zone where we're kind of in a downtrend? Tomorrow, we need to break that 190. Because of all the selling, the resistance keeps lowering. Before it was 225 resistance, then it went down to 210, then $2 resistance, and now we're at 190 resistance. Every time the stock falls, a new resistance comes up, and it gets lower and lower. Same thing with the support. The more it falls, the support gets lower and lower. Before, the support was at $2, then went to 175. If it goes below 175, the next support, 150. The next one after that, and I think maybe the last one, and I think maybe the last support, reason why, because it may lose a lot of attention, 125. Who knows? Maybe someone may start buying again and could be a short squeeze. So 125 is going to be a very important support if it does go that far. Hopefully it doesn't. All right, before I go to some news that popped up on my notifications earlier today, I just want to say this. As far as Opendoor goes, can it go up some more? It can go up some more. Can it go down? Yeah, it can go down. Sure, it can go up or down. But right now, it's trending downward. There's no good news. The CEO didn't say anything to give any investors confidence. So right now, it's a possibility it can go down more than up because the fundamentals was not bad. The earnings wasn't too bad. But for the stock to go up more, we need lower interest rates. We need the housing market to get back in shape. And that's going to happen soon. September, October. But that's just the beginning. It's going to slowly get better. And it could take some months. And some people say even years. But hopefully it doesn't. Hopefully it doesn't take years. But this may turn into a long-term stock hold if you're buying shares. That's just the truth about it. Only way this stock can deliver big profit to any shareholders at the moment probably be a short squeeze. That's always in the books. That can happen at any time. Any kind of news, any kind of new funding pop up out of nowhere. Any investor, any hedge fund start buying it. It can short squeeze easily because there's a lot of people shorting this stock. But besides that, we have a more of a downtrend than uptrend. Don't have much going for us right now. But at some point, it will. But it may take some time to get there. That's the issue. So the options are you can keep loading up at these levels and wait for the housing market to get better. We need some funding, another short squeeze, maybe a new CEO, who knows, because she didn't really give too many good remarks on the earnings call. And I'm going to show you exactly what I'm talking about right now. Let's start from the beginning real quick. Why did Opendoor go up in the first place? There was a catalyst. Hedge fund manager Eric Jackson on July 14th announced that his firm EMJ Capital had taken a stake in Opendoor and that he believed it could be a 100 bagger over the next few years. That's why it went up. It wasn't more so fundamentals or because the housing market was getting better. It's because Eric Jackson pretty much pumped it up, put some money in it because he believed in the company. So everything was going as planned. Put money in the stock, short squeeze, went up to $5. This thing was trading under $1 at some point, went all the way up to $5. Good job. But when the earnings came out, earnings wasn't that bad. It was okay. It was decent. We didn't expect the earnings to do too well because the housing market is still kind of slow, right? But this is what messed everything up. This was a catalyst for Opendoor and why the price is suffering. The Opendoor letter to shareholders projected a gloomy near-term outlook for the real estate market. This is true. These are facts. Looking ahead, we believe housing market weakness will persist. And we are not assuming any near-term catalyst for improvement, the company wrote. And here's the big one. Homeowners surveyed by research that a bearish outlook on the market with a majority, 55%, expecting home prices in their local market to either stay flat or decline over the next 12 months. The next 12 months. So it means pretty much all the way to next year, the housing market is not going to get any better. Is it telling the truth? Possibly, but we never know. But you kind of want to put some kind of positivity for the shareholders, not just all doom and gloom. That's my opinion. And here's the other big catalyst. Eric Jackson spoke up, and this is what he said. He doesn't really like Carrie Wheeler, CEO of Opendoor. She didn't really appreciate the retail traders to bring the stock back up. Eric Jackson says the retail traders allowed the company to get NASDAQ in compliance and cancel its reverse split. She didn't give any appreciation to anybody, didn't appreciate any shareholders, none of that. In my opinion, Opendoor probably would have disappeared if it wasn't for the short squeeze. Can this business model work? It can work, but it's going to take time. But how much time do we have? And lastly, this is what got me. When they asked the CEO of Opendoor about the short squeeze, she said, it probably wasn't on my bingo card for 2025. We want to make sure we harvest this moment. Harvest this moment. She had to use the word harvest, the moment. What do you mean you want to harvest the moment? Are you going to take advantage of the shareholders buying shares to make your company stock go up? You're going to take their money? Or what are you going to use the money for? Harvest the moment. That don't really sound good. It's not a good word. Could have used a better word than harvest. That's why Eric Jackson says, I'm out on Carrie Wheeler. Next man or woman up. And here's the last notification I got. Same thing. The word that got me got Eric Jackson as well. Harvest. Bad word, especially when it deals with money. Someone following Eric Jackson says this. I would have expected something, even the smallest of words. We hear our investors. We see their vision. We are working to become the world leader in real estate. Anything at all. Instead, we get the word harvested. So look, that's what I see. I think we need a CEO that's going to uplift the company, uplift the shareholders, use better words. Will it be her? Will it be a new CEO? I don't know. We'll have to see what happens. So yeah, back to the chart. Let me wrap it up. To get out of this zone right here, we're going to need a lot of buying volume, some news, maybe a little short squeeze or more, but to see what happens. But to get out of this area, that's what we need. Some volume, some buying volume, some pressure to get out of this area. If not, we could decline to the 150 area, between 150 and 175 area. If it keeps going down, see the MACD right here. If you know anything about the technicals, the MACD is still going down. RSI is still coming down slowly. It's not deep diving down because we are getting some buying every once in a while. We're kind of holding up a little bit. We're only down 1% today, which is not too bad compared to the 20% we were down just the other day. So yeah, hopefully we can hold this area. 150, 175, $2. 125 is going to be a danger zone. As I said before, resistance is going to be the $2, and the next resistance $2.15. If we can come back up. So pretty much we need some kind of housing data showing that buyers are back in the market. And if that happens, we're going to pretty much push up. We're going to get some buying volume into the stock because it's showing that, the real estate market is probably getting back on its feet slowly. It may take some time to get back on its feet like it was before. If we get continued data that people are buying houses more and more, that's going to look good for Opendoor. We can slowly rise back up. And then, we might get a short squeeze because the shorters are going to get nervous. They're going to be like, people are buying houses again. Maybe I need to buy back my shares. So you're going to get that buying pressure from the shorters. And then we're going to get buying pressure from maybe some institutions, maybe some retail, get back into it and push this thing back up. We need to break that $3 is our main goal. Then $5, then up we go from there. But yeah, watch the housing data. Very important. And of course, interest rates will come down slowly, but the housing data is what we're looking for, and buying volume for that short squeeze. All right, everybody. See you next time. Please subscribe, like, and comment. Comment anything. You have any questions, I'll answer it for you in the comments. Take care.